If you've been following the ups and downs of cryptocurrencies, you may be wondering if there's a smarter, more stable way to invest. Today we'll compare cryptocurrency investments with the tried and true method of index funds. Cryptocurrencies have certainly made headlines with the potential for incredible returns. But these cryptocurrencies also come with significant volatility. Volatility isn't necessarily a bad thing. Huge price swings can lead to gains, but they can also wipe out your investments in a flash. An index fund like one that tracks the S&P 500, for example, has far less volatility. The chance of an S&P 500 index fund going up 1,000% in 1 year is very low, but the chance of it dropping 99% in 1 year is very low as well. When it comes to cryptocurrencies and index funds, you have to look at what you're buying. One advantage that index funds have over cryptocurrencies is that they are well diversified. These funds provide a diversified portfolio of bonds or stocks, giving you a piece of the entire market. If a handful of cryptocurrencies end up becoming major players in the future, you will also likely end up indirectly investing in those cryptocurrencies when you buy index funds. Also note that when you buy stocks, you are buying a piece of a company. VOO tracks the S&P 500, which is the top 500 companies in America. VTI is the total US market, and VT is the total world market. When you buy these index funds, you are buying a tiny piece of all the companies in these index funds. If Bitcoin becomes a more popular store of value, it's likely that some of the companies in these index funds will end up holding Bitcoin, which there are actually already a handful of companies that already hold Bitcoin. With index funds, you know what you're getting into. You're buying a piece of these companies. Cryptocurrencies, on the other hand, are a very misunderstood technology. People are quick to mention the word technology when it comes to cryptocurrencies, yet they don't seem to actually know what cryptocurrencies are. Also, there have been several cryptocurrencies that have ended up being just outright scams. Crypto investing is filled with cash grabs, pump and dumps, along with pure hype and speculation. Now let's compare cryptocurrencies and index funds head to head. We're going to discuss the advantages and drawbacks of each. Cryptocurrencies offer the potential for astronomical returns. Some are decentralized, and this provides access to a whole new realm of digital currencies. Bitcoin, for example, has the potential to be a store of value, since we know how much Bitcoin will ever exist, whereas fiat currencies face inflation, as the supply is always increasing. With a cryptocurrency like Bitcoin, you can make purchases or send money to someone whenever you want. There is no company there to stop you or restrict you, but it's not all sunshine and rainbows. There are security concerns, regulatory risk, lack of investor protection, and there are also endless cryptocurrency scams. And there are also cons with actually using cryptocurrencies. If a cryptocurrency is actually decentralized, there's not going to be any way to contact customer support, because customer support is not going to exist. If you lose access to your keys, you lose access to your crypto. If someone else gets access to your keys, then your crypto is as much theirs as it is yours. If you send money to the wrong address, there's a chance you'll never see that money again. Index funds, on the other hand, are regulated, and reputable brokerages have SPIC insurance. This insurance acts as a safety net in the event of a brokerage going under or misplacing securities. As we've seen with the collapse of FTX and other crypto brokerages, this is something that crypto does not have. Index funds also have decades of history, whereas cryptocurrencies are still yet relatively new and misunderstood. SPY, which is a very popular index fund that tracks the S&P 500, has over 30 years of history. You also have the Dow Jones Industrial Average, which tracks the top 30 companies in America and has over 100 years of history. You can look back on these charts and see recessions, market crashes, and see that the price has recovered and gone up every single time. The index funds that I've mentioned in this video have very low expense ratios as well. Most brokerages that sell cryptocurrencies also charge fees for buying and selling cryptocurrencies. When using cryptocurrencies, many have gas fees, and sometimes those gas fees are very high. As mentioned previously, when you buy index funds, you are buying shares in companies. Some of these companies will make products and services that improve the user experience with cryptocurrencies. They'll also make the machines that are used to mine some cryptocurrencies. They will also make the products that people will buy with cryptocurrencies. These companies will also compete with each other, and you can easily invest in all of this with index funds. Now, one con with index funds is that they do require a long-term commitment. Index funds are not a way to get rich overnight unless if you are already rich. I'd also like to note that most investors will fail to outperform index funds in the long term. Some crypto investors may be able to outperform index funds in the short term, but more than likely they will underperform in the long term. You can also get tax advantages by investing in index funds, by buying them in a retirement account like a 401k or an IRA. Some IRAs do allow you to invest in cryptocurrencies, but most do not. With a 401k, you can also get an employer match, which is essentially free money. And there is also a new trend for brokerages offering a 1% match on contributions to a Roth or a traditional IRA. SoFi is currently offering a 1% IRA match on contributions in 2023. This allows you to get an additional $65 or $75 if you're 50 or older when you max out your contributions for the year. SoFi also has a welcome bonus. When you sign up to SoFi Invest using someone's referral link and deposit at least $10, you'll get $25 as a bonus. SoFi also has a bonus for their checking and savings account when you sign up using someone's referral link. You'll get $25 when you deposit at least $10. There's also an additional bonus of $50 or $250 when you receive qualifying direct deposits. I'll have my referral links down below. So what's the verdict? It really depends on your financial goals, your risk tolerance, and also your investment horizon. Are you in it for the long term, or are you after a quick profit? I view index funds as a key component to investing. And again, I view investing as a long-term game. I'm not against investing in cryptocurrencies, but due to the uncertainty and risk mentioned in this video, it would probably be a smart idea to also invest in index funds. One approach to consider would be to put most of your money into boring, low-cost, well-diversified index funds that have decades of history, and have a smaller percentage of your portfolio going into speculative investments like cryptocurrencies. It's recommended to put no more than 5 or 10% of your portfolio into speculative investments. If you're uncertain when it comes to investing in cryptocurrencies, consider diversifying with an index fund. A few solid options are VOO, VTI, and VT. If cryptocurrencies end up being the future, then you'll indirectly be invested in them with these index funds. On the other hand, if cryptocurrencies end up not living up to the hype, then you still own a small piece of several publicly traded companies.